Over the past 2 years, rents have shown little growth across all the prime residential markets. However, rental growth in the prime commuter locations, although not dramatic, has been higher than in prime London over this period. In prime London, rental values saw a marginal increase over 2013, continuing a period of lacklustre rental growth. This reflects an increase in available stock rather than falling demand. As a result, the market remains active, without landlords being able to dictate rental values. Smaller rental falls have been seen in the higher value areas of prime central and prime northwest London, where the increase in supply has been particularly noticeable. This reflects an increasing level of overseas investment. Additionally, relocation budgets have fallen over the past year. This has led to stronger growth in locations beyond the core central areas, as tenants are looking for value and are increasingly willing to expand their search to locations they hadn't previously considered. Consequently, the strongest rental growth over 2013 was seen in the southwest and the east of city markets. Beyond London, the prime rental market is largely confined to the high-value suburbs such as Elmbridge, and areas within a 30-minute commute to London, such as Sevenoaks and Beaconsfield. Beyond that, the prime rental market only extends to some high-value urban locations, such as Cambridge and Winchester. All these markets are able to attract tenants who are relocating from London and/or commuting on a regular basis. They also attract international tenants in a way that other prime markets beyond these locations can't. The best performing prime location in terms of rental growth is the suburbs, which is driven by a high number of tenants moving out from London. However, regardless of location, there is a clear correlation between the size of the property and the rental growth. Since the peak of the prime rental market in 2008, 3-bed properties have seen the strongest growth, with the average rental values across the prime commuter zone now around 2% below their peak. Yet over the past year, it is the 1- and 2-bed properties which have seen the strongest growth. This is driven partly by the younger renter who's unable to afford to buy, but the most significant factor is the employment relocation of young professionals. Across the UK, the private rented sector grew by around 2 million households in the 10 years to 2011. This growth hasn't been met by a similar increase in the supply of rental properties, which has resulted in the rents being pushed up. In the more valuable prime markets, where new build activity is concentrated and overseas investors are particularly active, there is not a similar shortage of stock to drive up rental values. However, given a recent increase in applicants and the improved outlook for the economy, rental growth in the prime markets is forecast to pick up in 2014. This is just a snapshot of the market. More information can be found in our full report.